Before I start, don't forget to like, comment, share, and subscribe. I will read the article by David Giffen. New York returns. Oil rose about 2% on Wednesday, rebounding from the previous day's lows as international energy watchdog expect an increase in gas to oil switching due to high prices this winter, even though the outlook for demand remains gloomy. The International Energy Agency (EAI) expects the deepening economic slowdown and a faltering Chinese economy to cause global oil demand to grind to a halt in the fourth quarter of the year. However, the, the IAEA also said it expects widespread switching from gas to oil for heating pur- purposes, saying it will average 700,000 barrels per day (ppd) in October 2022 to March 2023, double the level of a year ago. That, along with overall expectation for weak supply growth, helped boost the market. Global observed inventories fell by 25.6 million barrels in July. The EIA said U.S. inventories rose last week, once again boosted by the ongoing release from the Strategic Petroleum Reserve (SPR). Latest government data showed commercial stock rose by 2.4 million barrels as 8.4 million barrels were released from the SPR, part of program scheduled to end next month. The crude number suggests that once we down the clock on the Strategic Petroleum Reserve release, we are going to see substantial drawdowns in inventory, so that's keeping oil high, said Phil Flynn, an analyst at Price Future Group in Chicago. The organization of the petroleum exporting countries OPEC on Thursday, global oil demand in 2022 and 2023 will come in stronger than expected, saying the major economies are faring better than expected despite challenges such as surging inflation. The market had earlier traded lower on demand concern as global central banks continue to raise interest rates to curb inflation. The European Central Bank's ECB chief economist Philip Lane repeated the bank's pledge to continue raising interest rates with its focus on inflation. Higher energy prices remain a dominant driving force of inflation in the Eurozone, Lane said. A harder than expected U.S. inflation report on Tuesday also dashed hopes the Federal Reserve could scale back its rate policy tightening in the coming months. Fed officials are set to meet next Tuesday and Wednesday with inflation way above the U.S. Central Bank's 2% target. The market had earlier the Organization of the Petroleum Exporting Countries (OPEC) on Tuesday said global oil demand in 2022 and 2023 will come in stronger than expected, saying the major economies are faring better than expected despite challenges such as surging inflation. The market had earlier traded lower on demand concern as global central banks continue to raise interest rates to curb inflation. The European Central Bank's ECB chief economist Philip Lane repeated the bank's pledge to continue raising interest rates with its focus on inflation. Higher energy prices remain a dominant driving force of inflation in the Eurozone, Lane said. A harder than expected U.S. inflation report on Tuesday also dashed hopes the Federal Reserve could scale back its rate policy tightening in the coming months. Fed officials are set to meet next Tuesday and Wednesday with inflation way above the U.S. Central Bank's 2% target. Okay guys, that's all from me. Don't forget to like, comment, share, and subscribe.